We've got Venkat Ramaswamy, who's Executive Director and Head of Wholesale Asset Management at Edelweiss Financial Services, joining us live on the show. Venkat, to begin with, you're planning to raise $500 million for 2 private equity funds. If you could tell us how this is going to be done and by when we can expect that you will raise the money.
Okay. Hi. To start with, this is a little bit of a definition gap between private equity funds, traditional private equity funds as people understand it. The 2 funds that we have launched, one is a fund which is focused on making pipes kind of investments, which is basically investments in listed companies. The focus is to invest in companies which are between 100 and maybe $900 million of market cap, and buy 5-10% ownership in them and be a strong value-added sort of partner for these companies. And they are not, this fund will not invest in any unlisted companies, though it is private equity style, because the money will be drawn down and all of the money will not be drawn down in one shot. They will be drawn down one at a time. And the second fund is a special assets fund, where we are looking at companies which have some difficulty in their balance sheet currently and need some additional working capital or some restructuring of their balance sheet, which has got tightened because of variety of factors, including maybe an overrun in some project or foreign currency fluctuations or something of that kind, where we give them some convertible loans as well as buy some of their loans, and some of these convertible loans will convert into equity. And that is how these are the 2 funds, and both of them together currently have close to $200 million. We expect over the next 12 months to be able to raise the balance of the money. The Pipes Fund, which is basically called Edelweiss SBI Crossover Fund, we expect it to be in the $300 million size, and the Special Assets Fund, we expect it to be in the $400 million size. And so out of this $700 million, we have already raised close to $200 million.
Afternoon, Venkat. So you've given us details regarding these funds, but if you could also tell us which sectors you're going to focus on?
So both of these funds are sector agnostic. So they are not focused on any specific sectors. The crossover fund will look at high growth sectors, which are potentially consumer sectors, banking and financial services, and things of that kind. They will probably not invest in a real estate company, or probably not even in a infrastructure company, traditional infrastructure, asset-based companies. They would probably be more in the asset-light kind of companies. The Special Assets Fund will predominantly focus on manufacturing companies, which is where they get collateral. So the Special Assets Fund will definitely not invest in an IT company which will have no physical assets to give as collateral.
Right now, Venkat, we're seeing...
But there is no industry focus here.
Sure. Now, Venkat, we are seeing a big spurt in optimism in the PE industry for 2012. Would you worry about the rash of available liquidity likely driving up deal valuations once again to levels that we saw in 2007?
I actually don't think so. Because private equity is also coming to some level of maturity in India. We do believe that there are too many private equity, traditional growth private equity funds currently in India, and a lot more currently in different stages of fundraising. So, which will lead to maybe higher competition in the unlisted company area. We don't see that competition affecting either of our 2 funds, which will not invest in companies that these private equity funds traditionally invest in.
Venkat, interestingly, most PE
valuations.
Yeah,
sure. Sorry.
Go ahead.
Yeah, go on. Sorry.
So most PE
valuations in the sense.
Right, Venkat, go ahead.
So valuations, as you see 2011 versus 2010, I think valuations towards the end of 2011 have already started stabilizing or correcting. I think PE, like I said, PE industry managers are getting more mature, and people are bringing about an ability to walk away from deals once they reach a certain level of expensiveness. So.
Sure, and the point that I was bringing about is that most PE funds that we speak to believe that the primary market is going to, that the IPO market, is going to be the primary exit vehicle for them in 2012 in Asia. But in India, the IPO market is still facing strong headwinds. For example, we've seen about 12 IPOs which were hoping to raise 5,000 crores being called off. So how do you see exits playing out then?
So the good thing about India and exits for private equity investors is that Indian companies and Indian entrepreneurs over the last 2.5 years are getting ready to sell their companies. So we do believe that M&As will form a reasonable part of the exit strategy for private equity investors. Another strategy that we are again increasingly starting to see deals is where a smaller private equity fund basically sells to a larger private equity fund. So that is also another form of exit. So in India currently we are seeing 3 forms of exit: IPOs when possible, or M&As, as well as secondary sales to other private equity funds. And I do believe that in the current year, this trend will continue.
Right. And Venkat, what do you believe the bigger challenges to PE investing in India will be? Would you say it's going to be overvalued targets, or would you say it's going to be concerns over the regulatory environment?
I still think it is overvalued targets. Well, in my opinion, we just have too many private equity funds who are looking at investing in Indian companies. And so the result of a situation of that kind is that the returns that investors in private equity funds will make will go down. And I think it has been going down on a yearly basis, and currently, well, I believe it can't go down too much further. But the challenge is in the returns that the investors in private equity funds will get. I think regulatory environment, reality is India is a growth market, and it's still, even with its decelerating growth situation currently, even then the number is still, growth numbers are still attractive compared to most parts of the world.
Venkat, finally, just a word on the overall sentiment for the Indian markets. You mentioned that you'd looked to invest into sectors like real estate, banking, consumer as well. What's your outlook? And are there any other sectors that you think would look good as buying opportunities?
So, I do believe that the infrastructure sector will present buying opportunities in this year. But overall, as far as the market is concerned, currently we do believe, our house view is that the economy is at a decelerating growth rate, which basically means that the markets will be range bound for most of this year. It will provide buying opportunities, but it will be range bound. We don't expect it to run away on either direction through the year. Sectors, consumer, all the domestic consumption-led sectors, so banking, financial services, consumer, a little bit of pharma, all of these will be interesting sectors. IT could potentially come back to becoming an interesting sector this year.